I acknowledge the traditional custodians of the various lands on which we work today and the Aboriginal and Torres Strait Islander people participating in this webinar. I pay my respects to elders past, present and emerging, and recognise and celebrate the diversity of Aboriginal peoples and their ongoing cultures and connections to the lands and waters of New South Wales. Good morning everyone and welcome. Thank you for joining our webinar. My name is Kim Kellaway and I'm Head of Clients and Markets at HLB Mann Judd, and I will be your host for today. I would particularly like to welcome all our new ENFP community members, and we have over 220 participants. I would have loved for this to have been a face-to-face, but at this point in time, I think we still need to run these virtually. So this year we thought we would change things up, look at the format of our program and break our year into quarters and have a theme for each quarter. Our first quarter's theme is governance, risk and compliance, followed by strategic direction, innovation and technology, and financial management. So I'd like to welcome Aidan Smith, Partner Audit and Insurance and Head of our not-for-profit HLB Mann Judd Australasia. Over to you, Aidan.
Thank you, Kim. Actually, when we were doing the run-through for this presentation yesterday, Kim actually said to me at one point, she goes, "You're looking very young." I took that as a great compliment. I said, thank you, Kim. I do take a spoonful of oil away every morning. But then I realised she was talking about the picture that was on the screen and not me just now. So, yeah, maybe we should be updating that picture somewhat. Now, very fortunate today to have Mel Yates. Mel's the Director of Reporting, Red Tape Reduction and ACNC Corporate Services at the ACNC, and Mel's going to be giving us an update on the ACNC. Now, previously, Mel worked with the ATO. It's all right, he's a good guy now, but he worked there for over a decade across compliance, internal policy and insurance, and as well as operational financial management and government tax management roles. Mel's also worked for the Victorian Government in a finance-related function, and he started his career at a large professional services firm. After Mel graduated from uni, he travelled, worked in England in a social services finance role, and he's currently a Victorian Divisional Councillor and Chair of the Victorian Division Public Sector Not-for-Profit Committee at CPA. So, very busy man. So we appreciate that Mel's here today. Now, before we hand you over to Mel, as Kim mentioned earlier, we're going to do some polls. And the first one, what we're looking at, our not-for-profit specialist team in the last year has been working with many clients to manage risk. So what we'd like to know is what your top priority is regarding risk. So you've got this poll here, and there's a number of options there, which we've had many clients have come and talked to us about these ones, but there's also an option at the bottom for other, where you can click if none of those ones would be your response to the question. So please take a minute or so to read through that and then tick through what you think. So now I'll pass over to Mel. He's got a great presentation. Lucky enough to see in advance of it. There's a lot of things that you've got to think about as well. So Mel will be running through that and some action points too. So without further ado, I'll now hand you over to Mel, who will start his presentation. Thanks, Mel.
Thanks, Aidan, and also thank you, Kim, and welcome everyone. Good evening, good afternoon. I also want to thank HLB Mann Judd for the invitation to speak with you all today. And I also join Kim in acknowledging the traditional owners of the lands on which we all work and meet today. So in terms of, I guess, setting some context, on the first slide, I have got a graph. I just want to spend a couple of minutes just talking about this graph. Now, this is the graphical depiction of the number of charities that are registered with the ACNC in Australia. Now, as you can see, over the last couple of years, the darker line is the trend line, and the dotted line in the background is the actual number of charities. So when I checked yesterday, there are 58,611 registered charities. And so we're seeing a steady increase in the number of charities that are registered in Australia. We're also seeing the charity register and the ACNC website increasing in its popularity. So as you can see there on the slide, in 2018-19, there were under 1 million charity register searches. When we compare that to 2019-20, there were over 3.2 million searches of the charity register. Now, I guess a very good question is why? Why the increase? Now, looking back at what was happening over 2019-20, which honestly seems like an eternity ago, we had awful bushfires which were raging around Australia. And for those of you who were at last year's event in February, where I also spoke, we were right in the midst of, or just towards the end of, this terrible period of bushfires burning around our country. Now, there was a massive drive from the public, donors, stakeholders to understand charities and to learn about charities that people could support, donate to, or volunteer for. So really what we saw is this massive influx of interest in the charity register, and we've also seen the number of people searching the register has remained high. So it hasn't necessarily dropped back to the levels that it was at before the bushfires of sort of last summer. We're also seeing that the ACNC website is having an increased number of unique page views, looking at information about the ACNC, charities, guidance tools, all of the things that we have throughout our website. In 2018, in the calendar year, it was common for there to be around 300,000 to 400,000 page views per month. In the 2019 calendar year, that number jumped to more than 500,000 a month. And throughout 2020, we saw that number increase to regularly be over 700,000 unique page views of the ACNC website per month. So a large and sustained increase there. And I guess that just sort of highlights the context in which I want to present today and the context that we find ourselves in. There is increased interest in the work of charities. There's increased interest in the regulator, the ACNC, and what we're doing to both support the sector, but also regulate, which is our core role. And I guess if I think about what our core functions are at the ACNC, the register is the cornerstone. The register was created to help with trust and confidence, with accountability and with transparency for charities. So in addition to providing the charity register and making that freely available so that anyone with an interest in an organisation that is a registered charity can look at information about that organisation, we also obviously register new charities. So obviously with an increase in the number of registered charities, there is an increase in the information being sought about how to register an organisation. I briefly mentioned then that our core role is as a regulator. So we have a lot of information about the reporting requirements of registered charities, as well as the compliance function within the organisation that does all of the enforcement and investigations of wrongdoing by charities or alleged wrongdoing by charities. The advice, the guidance, the education and the resources that we make available to charities are also critical. All of that is freely available on the ACNC website, and I've included at the end of this presentation a number of links to some key resources that hopefully you will find useful and helpful if you want to find any additional information about anything that the ACNC makes available. Finally, one of the core objects of the ACNC is to reduce unnecessary regulation on charities. So that's also a part of my responsibility, and I will talk a little bit further about that later in the presentation. So jumping forward, we've talking about the bushfires just then, the last 12 months have been unprecedented, and I think that word has been used a lot, but I think it really, really has thrown many barbs up at many of us, personally, professionally, for our organisations. And registered charities have not been left alone. Charities have been significantly impacted and affected on one hand, and on the other hand, they have seen a bigger call on the services and the programs that charities run, because we have seen such quick and dramatic change in so many circumstances of Australians across the nation. And internationally, I might add, because many of our charities do operate internationally. So in terms of COVID-19, the ACNC really adopted a very flexible approach to our compliance requirements during this period, particularly around our governance standards and our external conduct standards. So Governance Standard 1 and External Conduct Standard 1, that really focuses on a charity sticking to its purpose, operating within the purpose that it has been created and has been enabled through charity registration to fulfill. So, as I said, we've adopted a very flexible approach whereby some charities pivoted and undertook some different activities that were not aligned with their core purpose. So what we did is we provided some guidance and support to charities so that if they did want to move to undertake different activities that might have been incidental or ancillary, then we supported charities in that by saying that that's fine, but the charity needs to consider that, it needs to document that, it needs to show that it has tried to communicate with its members where the organisation has members about this change, and obviously keep adequate records so that if anyone does ask questions, it's all been considered and documented and there is an audit trail there. In terms of Governance Standard 5, which really focused on insolvency, we did find that some organisations were very concerned about operating while insolvent, and the federal government did introduce some changes to the Corporations Act that really enabled organisations to potentially trade insolvent while they were insolvent, but provide a bit of a path back to solvency without the consequences that would otherwise flow to those organisations. So we mirrored that effectively for all organisations, and what we said was that if a charity incurs a debt in the ordinary course of business during the relevant period that was in play, before any appointment of an administrator or a liquidator, hopefully organisations didn't get that far, we allowed charities to be a bit more flexible in the way they manage their affairs, as long as their responsible persons were aware of the issue and there was an achievable aim to return to viability after the initial crisis period had passed. And obviously the charity needed to continue to follow relevant federal and state legislation, as may be the case. So we adopted that, and we didn't just apply it to companies that are charities, we adopted that across the board for the whole of the registered charity population. In terms of External Conduct Standard 2, that's really around record keeping and the requirement for organisations which are operating overseas to make sure that they keep adequate records of what they're doing, how their activities and their programs are being run, how money is being spent and the like. So we allowed some flexibility if a charity wasn't able to get that reporting over that period of time, then that was completely understandable with the turmoil that was being experienced in and still is across many parts of the world. Then we encourage charities to record reasons why they're not able to obtain that reporting. And obviously the charity needed to try to get that information as soon as possible. So many organisations in the charity space, I haven't seen some recent stats, but I know back in September, there were around about 330,000 employees of registered charities in Australia that were benefiting from JobKeeper. So JobKeeper has been a massive help to the charitable sector. And what we, I guess, what we saw from that is there was some very, very, I guess, common questions about, well, what does that mean for the organisation? What does that mean for the charity? So we have put some information on our specific COVID-19 page around JobKeeper and the treatment of the receipt of those funds from government, which is revenue. So just to confirm, any JobKeeper payments received from government, they do count towards the size of registered charities, and they should be recorded as revenue from government within the financial information of the annual information statement. And if required, if the charity is sizable enough that it has to prepare financial statements, it should also be recorded in those financial statements. We did have a lot of organisations that weren't able to hold AGMs. So we did provide a lot of guidance and also particularly relevant links to other regulatory bodies, be that state, territory, or ASIC, for example, where the requirements to hold an AGM are somewhat different to the ACNC. So the ACNC has a governance standard, which is Governance Standard 2, that requires accountability to members. It doesn't necessarily stipulate that an AGM has to be held, but that's the normal way in which many organisations communicate with members, share information, and demonstrate adequate governance in relation to decision-making and formalising or ratifying many decisions of the organisation. So what we recommended is that if there was the option of holding a remote meeting, that was an option. We saw some state and territory governments adapt their regulation to enable those remote or virtual meetings to occur, but not every organisation was able to do that. So what we advised was that if there wasn't the option of holding a remote meeting, then again, document the reasons why. Use alternative ways to communicate with members, potentially schedule a meeting in future, and basically make sure that the communication is documented so that if anyone does ask questions, then that is available. Now, I do want to highlight on this slide two items which are currently being consulted on. So Federal Treasury, the Australian Treasury, are seeking submissions at the moment on a draft legislative instrument and explanatory materials for changes to Governance Standard 3. Now, what is Governance Standard 3? That is basically compliance with Australian laws. Now, this flows from the ACNC legislative review, which was released on, the government response was released on the 6th of March last year. One of those recommendations was around addressing uncertainty in the law. So the consultation is really aimed at the current governance standard for registered charities, that charities must not engage in conduct that may be dealt with as a summary offence relating to real property, personal property, or persons under an Australian law. Charities must take reasonable steps to ensure their resources are not used nor continue to be used to promote or support any entity to engage in unlawful activities prohibited under the standard. And the purpose of Governance Standard 3 is really to give the public confidence that a charity is governed in a way that is sustainable and consistent with its purposes, and that it protects assets, reputation, and the people it works with. So that is quite important. There's been some media and some attention being drawn to this piece of consultation, which is currently open. I would underline the fact that this consultation closes in just a couple of weeks, the 14th of March. So there's still time. I've included a link at the bottom of that slide, and I think that item is either second or third from the top of Treasury's consultation. So if that interests you or is relevant to you, I would encourage you to access that information and participate in that consultation process. The second point I want to draw to everyone's attention is around harmonising the financial reporting thresholds. Now, this is basically very hot off the press. This became live on Monday of this week, so it's still fresh. What is happening here is the Australian government, the Treasury, have worked with each state and territory government to see if there is a possibility of increasing the reporting thresholds for charities that are registered with the ACNC, and working with each state and territory government so that there would be consistency in these thresholds. Currently, some states and territories have adopted ACNC reporting thresholds, some haven't. So it's very inconsistent. So the aim of this piece of consultation is to get views from stakeholders about setting standard thresholds right across the country and getting feedback about what that might look like. Now, the proposals in this consultation are that small charities would be up to $500,000 in annual revenue. That's double the current level, and those organisations would be required to provide an annual information statement. Medium charities at the moment, that threshold cuts in at $250,000. That would double to $500,000 and would be in place up until less than $3 million in revenue. And those organisations would be required to complete an annual information statement and provide a reviewed financial report. Now, large organisations, that would kick in when revenue is 3 million or more, and those organisations would be required to provide an annual information statement and an audited financial report. So this was a recommendation out of the ACNC review. So this is what we are seeing, this coming into fruition through the consultation process. So again, I underline the fact that this is open until 21 March. So still enough time to participate. There is a survey. There is also the option of providing written submissions. So I would strongly encourage stakeholders that work with charities across Australia to participate in that survey or provide a written response. This is a really, really important, and I'll also dovetail back to this shortly when I talk about some other changes. So moving on to the next slide, I did want to touch on the DGR reforms, which which we're seeing are sort of playing through at the moment. So one thing I want to highlight is community sheds. From the 1st of October last year, community sheds, and this is what is known as men's sheds and women's sheds, they are eligible for deductible gift recipient status under a new category that is available from the ATO. These organisations have to be registered as a charity to apply for that DGR endorsement. And we worked very closely with peak bodies around this announcement throughout last year. So most of those organisations are well versed in this, but I do think it's important to bring this to the attention of this audience. You may have clients or you may work for organisations which are heavily involved in that community shed space. So very, very relevant. In terms of the second dot point under DGR reforms, I wanted to quickly touch on the fact that the ACNC has been funded by government to undertake a series of reviews around charities that have DGR endorsement. So what we have been focusing on at the moment is organisations that have public benevolent institution status, so PBI status. We have been doing a lot of work internally, looking at a subset of those organisations, and what we will do is we will start over the next few months to actually reach out to some of those organisations where we do think there's an anomaly or we do think something's wrong, and we do want to have some dialogue with that organisation. If you don't hear from us, that means that we've either looked at you and there's no issue, or potentially you might be in a future cohort. But what we have done is we've developed a lot of guidance, a good self-assessment guide as well on our website, which I would encourage organisations that do have DGR status to look at and become familiar with. There's nothing wrong with making sure that the governance within your organisation is up to scratch and is adequate. So even though this was designed specifically for organisations that are subject to these reviews, there's nothing wrong with using that resource and giving it to your board or going through that yourself just to make sure that you're comfortable that there's no issues there. In terms of the risk reviews, so this was announced in last year's budget, which was deferred until October. So the federal government allocated $2.9 million to the ACNC over 3 years, and that's really to conduct risk reviews. So field-based compliance reviews where charities are at risk of failing to meet governance standards. So really, this will help strengthen the assurance that charities have appropriate governance structures in place and use their income for charitable purposes, which includes when responding to natural disasters. And we did make public some reviews, which we did with some charities that were sort of first responders, if you like, and were very pivotal in the bushfires. And we did work with several organisations to sort of outline some feedback to those organisations and whether we did have any concerns. Now, the JobMaker plan. So this might not mean anything by saying JobMaker. What's JobMaker got to do with charities? The digital business plan of the Australian government, which used to be known as modernising business registers. So what is this? This is basically the renewal and changes to many government registers that are going to be combined into the Australian Business Registry Service. So some of those registers sit with ASIC, some sit with the ABR, the Australian Business Registrar. These are all going to be refreshed, if you like, and modernised. Now, what does this have to do with charities? I'm just flagging this as advance warning. If you work for or are part of an organisation that is an ASIC company, there will be a requirement in the future. There's no action needed right now, but I do just want to flag this, that in the future, probably next year, there will be a need for all of the responsible people that are governing that particular organisation, which is a charitable company. They will need to get a director identification number. So that will be a unique number that will be allocated to each of those responsible persons, and that will need to be provided through the reporting process. So very, very infant at the moment. Planning is taking place. So no action is required now, but I do want to flag that there will be a call to action in future in relation to directors of companies and responsible people of charitable companies needing to get that director identification number. Now, finally, the last dot point, the AASB not-for-profit reporting framework. So the AASB board are meeting today, I actually think, the 24th and the 25th. So one of the items on their agenda is starting to think about the development of a not-for-profit reporting framework for Australia and the development of a discussion paper, including starting to think about some preliminary views on aspects of a differential revised reporting framework for Australia. Again, there's no action needed by anyone right now, but I do expect that later this year, I do expect that there will be an opportunity for public consultation in this space. So basically what that will mean is that there will be an opportunity for public consultation, sharing your views and those sorts of things in future. So next slide. I do want to move on and talk about what's been happening with the annual information statement. So the AIS, annual information statement, is the mechanism that the ACNC use to collect information from charities. We changed some of the questions in 2020, and we now allow charities to provide details of programs rather than activities. So the definition of a program is there, and these slides will be shared with you. So feel free to read that again in your own time. But what we are collecting is we're collecting the name of each program, which can be anything that the charity thinks is suitable as a name. That's not particularly important. What is important is the subject classification. Now, the classification is based on the Classy taxonomy, which is developed by our community to classify charity sector programs by subject. So this has been customised for the Australian context, and there's over 800 classifications. I was going to say 800,000. There's not that many, just over 800 categorisations covering 19 different groups across examples like health, education. So this is really a bit of a change in the way we're collecting reporting. And the reason we're doing this, I'll touch on a little bit later. So next slide, I do want to highlight that what you put in the annual information statement or what your charity reports, that is what is seen by the public, by potential donors, by volunteers. So what I would encourage everyone to do is make sure that you include comprehensive details about the programs that your charity undertakes so that people can find information about them. And if you haven't done this, I'd actually encourage you to go and have a look at your own charity register listing, because that's what everyone sees. And so you might have a look and you might be surprised at what has been reported. Obviously, many organisations delegate completion of the annual information statement to a particular individual. So we obviously encourage the responsible persons of the charity to make sure that they see the annual information statement before it's submitted. But sometimes there might be reasons why people don't necessarily know what's in it. So I do encourage you to have a quick look at your own register listing. Next slide. So a couple of things I want to talk about the annual financial report. One of the things that we have just released it was earlier this year, we've called best practice disclosure. So this is really around better practice of disclosure of sources of government revenue. What we're saying is that when we've looked at the financial reports for charities, there's a lot of inconsistency across organisations that do receive government revenue. There is a noticeable need that half of the sector's revenue, or nearly half of the sector's revenue, comes from government. So that's a material amount of revenue into the charity sector. So what we are saying is that we encourage better practice disclosure by charities around who they receive money from government, whether it's Commonwealth, state, territory, local government. And what we're really saying is if you receive 10% or more of your total revenue from government, we're encouraging charities to outline the total revenue that they receive by each level of government, the names of government departments or agencies from which they receive that revenue, up to 10, as well as the total amounts received from each. And many charities provide goods, services, and support beneficiaries who receive government financial assistance. And the classic example of this is through the National Disability Insurance Scheme. So what we're saying is if a charity knows this information, it would be better practice for that charity to disclose the amounts that it receives from the National Disability Insurance Agency for the provision of those services and goods to those beneficiaries. Now, I think it's really important to highlight that these disclosures are not replacing anything. They are designed to supplement the existing disclosures that many charities already make. So again, this is best practice, our view of best practice. It's voluntary, it's not mandatory. but many charities do already do this. But there are some charities for different reasons that don't necessarily provide this granularity. And we think that this is good for users of the financial statements. We're encouraging this to be done by way of note. It doesn't have to be done on the face of the financial statements, but we think that providing a note is a good way to do this. Now, I do want to briefly touch on some of the changes to the disclosure requirements for charities that prepare special purpose financial statements. So really for periods ending on or after 30 June 2020, so any periods ending on or after 30 June last year, there is a new requirement for not-for-profit entities, and that is really to disclose the basis on which the decision to prepare special purpose financial statements was made, whether those financial statements comply with recognition and measurement requirements of Australian accounting standards, not including consolidation and equity accounting. And really, this is not designed to be burdensome, but is designed to disclose information from charities about accounting policies based on what they already know. So charities are not required to conduct a detailed assessment of each policy, but to disclose what they know about their accounting policies and what complies with Australian accounting standards. And if a charity is not sure, then disclose that. So there is a flowchart and illustrative examples within the standard to help with that, and that's in AASB 2019-4. I do also want to take this opportunity to remind charities that we did make some changes to our group conditions. So that is where multiple registered charities provide one annual information statement and a consolidated annual financial report. We have changed that slightly to require that where an organisation prepares special purpose financial statements, they should be complying with AASB 124 related party disclosures, either in full or at least to the reduced disclosure level. We're also taking a bit of a closer look at the timeliness of reporting. Now, on the next slide, this is just an example note of what I was talking about. So this example note outlines that this particular charity received money from the Commonwealth Government. There's 4 different sources there, from the state government, 3 different sources there, or 4 different sources there, sorry, and then 2 sources from local government. So it's not designed to be particularly onerous, but we do feel that users of financial statements will appreciate this visibility of government revenue sources. We're also asking for organisations to consider whether they have an economic dependency on government revenue. Many organisations do receive substantial amounts of government revenue, and that's fine. There are reasons why that is. There are many things that government are not equipped to deliver or don't want to deliver. They entrust that to charities who have they're very equipped and knowledgeable about some of the more profound and challenging matters that they work with, where they're the experts in certain fields. The third thing is really disclosing more information around funding which has been received from government, which has not been recognised as revenue because those obligations haven't yet been met. So there's additional information about that. There's a link at the end of the slides, so I won't spend any more time on that. We'll move on to the next slide. So just a reminder that the ACNC does undertake a review of a sample of annual financial reports which are submitted to us. Some of the common issues we see are that there is not consistency between the annual information statement and the annual financial report. So the box in the bottom left-hand corner, the correct transposition of financial information, keying in information in the AIS should be reflective of the AFR. They should be consistent in the vast majority of cases. There is a question in the annual information statement that asks what type of financial statements have been submitted by the organisation. Are they general purpose financial statements? Are they special purpose financial statements? Are they reduced disclosure? We do find that a large number of charities misclassify that. Completeness of financial statements. So that's really making sure that the 4 statements which are required under the ACNC legislative framework have been submitted. So the financial performance, comprehensive income, financial position, cash flow changes to equity, they're key and critical to meeting the legislative requirements, as well as notes to the financial statements, signed and dated responsible persons declarations, as well as a review or an audit report, depending on the size of the organisation. So they're the core parts of what we expect to see in a financial report. And where we don't see that, we will go back to the organisation and ask the organisation to correct the deficiency. Now, the compliance with minimum Australian accounting standards, currently there are 5 standards that must be met as a minimum for an organisation that prepares special purpose financial statements. Obviously, if the organisation prepares general purpose financial statements, then all accounting standards which are relevant need to be complied with. Correct use of the 2-year transitional arrangements. So we are getting to the point now where the arrangements that we put in place with many state and territory governments are getting toward the end of that 2-year transitional period. And the reason that we do that is basically to ensure that some relief is given to organisations so they don't have to go back and restate comparatives, for example. So progressively over time, those organisations adopt the ACNC reporting framework. And related party disclosures, we do see a lot of organisations which state that they have prepared general purpose financial statements, and therefore related party disclosures are a key and core requirement, but we don't see any related party disclosures. So again, that is quite a focus area for the ACNC to make sure that that requirement has been met. I would highlight that we do have a checklist on our website that talks about what needs to be thought about and included in the annual financial report. So that is a really important resource that I would underline for use, and have a look, make sure that you're complying with all of the points that are outlined. It's available on our website from our reporting hub, the link of which I've included later on. So we're also thinking about some frequently asked questions and what other information we can put on the website. And we have worked over the last little while on improving the guidance and improving the information that we make available to charities through our reporting hub, which was launched last year. Next slide. So reducing red tape. So this is really a key role of the ACNC. And I'm very pleased to announce that since I last addressed this group, last year in July, we had confirmation of a streamlined reporting arrangement for Western Australian fundraisers. So that's great. There's now a streamlined arrangement for licensing in Western Australia. So that's great. There's streamlined reporting. So organisations don't need to send the annual statement to Consumer Protection in WA. They just report to us and we share that information back. And for Western Australian incorporated associations, again, streamlined reporting arrangements. So there's not the need to submit a separate annual statement to Consumer Protection. There's a couple of things that we collect in the annual information statement for the West Australian government. So as long as organisations answer those questions, if they are a Western Australian incorporated association, they meet that streamlined eligibility, and we share that information back to the West Australian government. And Victorian fundraisers, that also came online in on the 1st of September last year. So there's, again, streamlined arrangements for renewal of registrations, annual reporting, and lots of improvements there. So under that second dot point, the streamlined reporting arrangements, you'll see that we're building up a larger collection of states and territories that we do have streamlined reporting arrangements with. So we've got 4 streamlined arrangements with South Australia, the ACT, Victoria and Western Australia. There's no requirement for reporting in Tasmania, and fundraising is not regulated in the Northern Territory. For incorporated associations, we've got 7 out of the 8 jurisdictions. So you'll see that I've listed Queensland separately there. The Queensland Parliament did pass the Associations, Incorporation and Other Legislation Amendment Act in 2019. So that was the catalyst and the beginning of reform in Queensland. But going back to what I mentioned about the Thresholds Working Group and the consultation which is happening at the moment, there's many moving parts that are happening simultaneously. So the Queensland government obviously are part of that Thresholds Working Group, and they are very, they're monitoring very closely what the feedback is from that consultation. So Queensland is outstanding, but hopefully it won't be too long before we do have a streamlined reporting arrangement for Queensland as well. And I've listed non-government schools, ORIC, which is the Office of the Registrar of Indigenous Corporations, and ancillary funds that report to the ATO. We've got streamlined arrangements for each of those other regulators, and non-government schools, they provide their reporting, or can provide their reporting, to the Department of Education, Skills and Employment. We get that from them. ORIC, charities that are registered with both organisations, they don't have to complete an annual information statement, and we collect information on behalf of the ATO, and we share that information after charities provide that to us. Now, I do just want to touch on fundraising very quickly before I sort of move on too far. There is a lot of interest in fundraising reform. So last year, the ACNC was an observer on a national working group that was thinking about fundraising reform, and some of the things that were thought about that came out of a consultation that New South Wales led were a potential deeming model or a cross-border recognition model for charitable fundraisers, whereby if a charity held a fundraising authority in one jurisdiction, it wouldn't need to go and get 7 or 8 other licenses, depending on what the charity was fundraising for. So that was one of the potential advantages of that. The states and territories are considering that, but as I said, the ACNC was an observer, so we outlined the help that we could provide to states and territories through information sharing and the like. So it's now in the bailiwick of the states and territories to think about what they want to do in that space. Now, just briefly, I want to touch on the enhanced register search. So going back to what I mentioned before about charities providing information about programs via the annual information statement, this is really going to allow the ACNC to springboard what information we can make available to people on the charity register. There's a link on that slide at the bottom. I would encourage you to go and have a look at the AIS program previewer and get a sense of how your organisation may report by program. Many organisations already have. We've already passed the first lodgement period for organisations with a 30 June year end. That was the 31st of January. However, I just want to sort of touch on what might be possible. So charities have to provide the classification. That's really the key. As I said before, the classy taxonomy is over 800 options there, and then information about the beneficiaries and the location. Now, the location is very flexible. It can be an address, it can be a suburb, it can be a state, it can be something like the Sydney Opera House, it can be the Murray River. It can be very, very flexible, and it can be a combination of those different examples that I've provided. Now, on the next slide, what we want to do is we want to really bring to life enhanced search functionality. Now, this will enable people to search information about charities that are delivering particular programs either by the classification or by geographic location. Now, a bit of a teaser on the next slide is what we might be able to do. So I'm not saying that this is definitely going to happen, or this is definitely what it will look like. But what I do want to try and give you a sense of is what might be possible. So there might be the ability to have a list view or a map view, so that if you wanted to look in your particular suburb or your particular location, you might be able to get information like this about registered charities. So that's just a bit of a teaser. As I said, complete disclaimer, we're still working on it, we're developing it, but we really want to bring the register to life to make it much more useful and really provide greater impact to people that use the register. Now, I'm going to stop talking now. I'm just going to have a quick look at some of the questions that have been asked. Kim, how are we going for time? I might hand back to you, and you can either ask me questions or you can guide me as to where we're going from here.
Okay. You've answered a number of questions throughout your presentation. We've got 3 sitting here, and we've got 4 minutes. So I think what we'll do is we'll answer a couple, and then Mel will take the others offline.
Right.
One question we've got here is this: if a number of intra-state groups of the same organisation relinquish their governance and financial management to a larger group of the same organisation, should the first group lose their voting rights at any future AGMs or conferences? Would you recommend mergers without penalties to the merging organisations?
That one's a little bit complex. I'd actually ask Kim that we perhaps take that offline.
Yes.
And I'm happy to have a talk to Eric about that. I'm not going to express a view right now.
Okay, thank you. Please, can you tell us, Mel, why don't non-government schools publish annual reports?
So they actually do, but there's a time lag. So for non-government schools, we've actually just published the annual information statement, or we did around Christmas, for the 2019 reporting period. We have just published the annual financial reports for non-government schools for that same period. So the 2019 period is now available on our register, but there's always a greater lag because we need time for those organisations to report to the Department of Education, Skills and Employment before we can actually get that information and get that uploaded to our register.
Thank you. And then there's the last one, which we will take, and as I said, we'll do the others offline. Does responsible people of charitable companies include the company secretary where they are not a director in terms of the DIN?
That's a really good question. If they're not a responsible person, then I would say on the face of it, no, but that's a really good question. I'm actually going to follow that up with the liaison that we have. We've been working very closely with the other parts of government who are leading this. So I think that's a really, really good question. And we'll make sure that when we do put out any guidance about that, that is included. So thank you so much for that question.
Thank you. Look, I'm going to close off on the questions there. There are a number, and as I said, we'll take those offline because we've only got 2 minutes, and I'd like to make sure that we close off right on time. So these next slides that Mel has provided, these are links to resources that are available to everyone. And that's your completed slide. So we've gone through some of the questions. So thank you everyone. I just wanted to some exciting news. And you might have seen my post yesterday that HLB Man Judd has been named finalist in the Client Choice Awards in 4 categories. Best Accounting and Consulting Services Firm, 50 million to 200 million revenue. Best Provider to Government and Community. Best CX Firm, Accounting and Consulting Services. And Best Innovative Accounting and Consulting Services Firm. So I just watch this space as the winners will be announced on the 23rd of March, or you may actually hear me wherever you are, because that will be such an exciting night for us all here. Okay. In quarter 2, we'll be focusing on the theme of strategic direction. So here's just a quick poll. What are the key, as a not-for-profit, what are the key areas that you will be focusing on over the next 12 months? That is the end of our webinar today, and I'd like to thank Mel for his presentation and his time. Mel has also confirmed that, as he said, he's very happy to share the slides with our ENFP community. A recording of this session and the PowerPoint slides will be sent to you shortly and uploaded onto the ENFP LinkedIn community. I'd like to thank you all again for joining us today. Stay safe. And hopefully in the coming months, we'll be able to do this face-to-face, because I know that we miss our face-to-face, we miss our banter, we miss, getting together and to be able to see each other. So thank you so much again. Thank you for entering the details in terms of the polling questions, because this will really allow us to set the scene for our next quarter. Thank you very much. It's the end of our webinar for today. Thank you, Mel.
Thanks, Kim.